you. So I guess we will just dive right in and start with the question that was asked to us in the beginning on growth. And I think the running joke is that when you think about India, the prospects for the country get brighter the further away you are from it. So I wanted to start with that sort of anecdote and ask Saurabh. We sat here 2 years ago on this panel and talked about growth prospects, and we were notoriously more optimistic than what we see on the ground, at least when you look at economists within India versus economists outside of India. What's your view on the growth outlook and this divergence between the two?
So the irony is that compared to 2 years ago, whilst our actual growth experience might not have been as positive as we would like it to be, the actual published growth data from the Indian government suggesting that growth is around 7.5%. The actual data from the Indian government suggests that we actually have a very, very robustly going economy. Now, there's a couple of reasons why several market participants, such as myself, have been reasonably circumspect, perhaps even cynical about these numbers. And the first of those is for the last 7 quarters. The last 7 quarters, we've barely seen any earnings growth in the market. To find a period as long as this, i.e. 7 quarters of zero earnings growth for the stock market, you have to go back to the early 90s when Manmohan Singh and P.V. Narasimha Rao launched their reforms of July 91, and we then had 3 years of almost no earnings growth in India. We sort of we seem to be going through a similar phase where at least the stock market earnings are clearly not growing at the pace that 7.6% GDP growth would suggest. But there's a deeper problem, I think, with the data. I think the deeper problem with the data is if you take a battery of real economy indicators, for example, cement volumes, imports, capital goods imports in dollar terms, rail freight, truck freight, even if you take a battery of real metrics, you struggle to see where the 7.6 growth comes from. And as a result, I think what's happening is, increasingly our clients, and the bulk of Ambit's clients are foreign institutional investors, they're sort of turning around and saying that, look, there's no point either we as Ambit or the government of India trumpeting its growth numbers because the growth is not apparent either in corporate earnings or indeed in real economy metrics. And that's where I think we've got a credibility challenge now with our GDP growth data. So leaving aside whatever the future holds for growth, and that can be a topic for discussion as to what does the future hold for growth in India, the current situation is that the vast majority of our clients have stopped regarding and using the GDP growth data that the government actually publishes, and we continue to see quarter after quarter of almost zero earnings growth from the large listed companies.
Okay, so you've been focusing on earnings growth. Saugata, maybe I can talk to you a little bit about what you're seeing on other macro measures in terms of where you see momentum within the macroeconomy, but where also you think that there's overstating relative to reality.
So thank you, Roopa. If I can just, before getting into that, with the growth numbers a little bit, where does this 7.5% growth come from? It comes from sort of profits. When we move to this new growth accounting system, we move to a UN standard, which all countries use. I don't know about China. Chinese GDP numbers are a little dodgy. But it's followed as a UN standard throughout. Previously, before these the growth numbers came in, we used to use a database coming in from CMIE or the RBI database of about 4,000 companies, 4,500 companies. The current growth numbers are based on the so-called MCA 21 database, which is the Ministry of Corporate Affairs 21 database, which has about 550,000 companies. 500. Assume 30% of that is garbage. Assume. So that's still about 300,000 companies. So moving from 4,000 companies, you are on to 300,000 companies with a UN standard. So what's the problem? The GVA, as it's called, the basic growth measure, GVA plus indirect taxes is what is called GDP. So the GVA is the gross value added. And that, if you compare, if you take the equivalent, again, I mean, working with we don't have access to that MCA 21 database. So we work with a standard 4,000, 5,000 companies. So if you take the profits, the earnings as a proxy of profits, and add to that the salary, the wages and salary costs, which is what is value added. you'll be surprised at how, over the last quarter on a quarter basis, how closely the two numbers track each other. The actual published growth numbers and the results that we derive from the corporate database. So it's actually, there is something in the measure that we track. And it works by sectors. I mean, if you look at manufacturing, if you look at construction, if you look at, it periodically diverges here and there, because I mean, we can't capture the whole series. So it's capturing profits, and boy, companies are making profits. Saurabh will know of this, that whatever, due to, I mean, for the last couple of years, because of the fall in commodity prices, raw material prices, previously, many companies in all of India with the slowdown, we have been looking at cost competitiveness. So there is some number. Now, we can argue whether is this the appropriate measure. And this is one of the reasons why we think growth this year in FY17 is probably likely to be even lower or at pretty much at the same pace as in FY16. Because at this point, all the benefits, the savings that you are getting from the raw material side, that's probably leveled off now. It'll actually increase at some point, and companies are still too weak to have a lot of any significant pricing power. So as a result, we should not be expecting, for this year at least, and maybe for a couple of years, any high degree of growth. That 8%, 8.5% is not feasible in this. So I think best to stop at this point in time. You asked about the sectors. Where do you see the growth momentum coming in from? Cross my fingers. I mean, if we get a good monsoon, maybe we'll get a little bit of something from the agricultural sector. I think the other thing that we will see, I think there's been a huge amount of EPC style construction activity coming in from roads. For those of you who have worked with the government, that there is typically a 15 to 20 month government procurement cycle in the EPC. So all the road projects, some rail projects, the power transmission projects and things that you're seeing, will probably begin to see some activity on the ground in the next 3 to 6 months.
Okay, so just following on from them, that Bharti, if I can ask you, given that consumption is such a lion's share of our economy, what do you see in terms of the prospects and within the consumption story? Are we seeing a turning point in terms of who are the big drivers?
So actually, I mean, those of you who track the sector will know that the engineering firms have been chock-a-block for the last 12 months or so. It sort of started picking up early in 15, and you talk to any engineering firm and they will tell you that they have a really good order book. Typically, as Saugata was saying, there is a time lag once the DPRs are done, the engineering designs are done, orders get placed, and then you start to see movement on the ground. So, based on what we're seeing in the infrastructure sector, we think that the real activity on the ground will take another 6 months or so. Whether it is in terms of cement sales or is it in terms of construction activity actually starting up.
And consumption?
Consumption, actually, what you were saying about growth being there or not there is actually quite an interesting story. So I want to share an example of, any one category. Let's say the juices market. So typically this is a 1,500 odd crore market. It's been growing at 20%. There are two majors, one multinational, one Indian, which had 80% of market share. Last 1 year, market is still growing. Their growth has tapered to early tens. And there are, another dozen odd small cold-pressed juices players who've come in and have taken, 100 odd crore of the market. So I think growth is there, but it's getting fragmented, at least in some categories.
So if I could just pick up on that, and I think that's probably the way to reconcile the point Saugata was making and what we are seeing in the stock market. See, the stock market by definition is dominated by quite literally 50 companies. So 50 companies make up 80% of or close to more than that, 90% of the market cap of the Indian market comes from 50 companies. So although we have 5,000 companies listed, the Nifty makes up 90% of the market cap of India. And I think the big thing that's happened in India in the last couple of years is growth is getting democratized. It's becoming, whether it's in cold pressed juices, whether it's in banking, whether it's in biscuits, whether it is in turbines, small cars, paints, it's becoming easier to set up businesses, access capital, and get moving in India. As a result of that, the dominance of oligopolists, and if you see India, one of the very striking things about India compared to economies like, say, Thailand, Malaysia, Turkey, if you go to an Indian supermarket and compare it with a supermarket in these other countries, you'll see almost in every category in India, we have one or two companies. We have one butter company, one cheese company, two paints companies, really only two biscuit companies if you think about it, two small car companies. So we've been historically a market dominated by oligopolies. And what we are seeing, I think for the first time in at least a decade or so, is those oligopolies are coming under pressure. As they're coming under pressure, they're finding it hard to price goods upwards in the way that they used to, which is putting pressure on profit margins in the Nifty. However, that's not reflected in the broader economy, and Saugata's point about the broader data set of 300,000 or 400,000 companies that the government's using. So what you're getting is a very interesting dichotomy where large dominant oligopolists in India are finding life much tougher than they have in the past, and yet there's never been a better time to set up a small business in India and get moving, because you probably have better access to capital than you have ever enjoyed before, both debt and equity capital. And this change, this what I call the churn in the Sensex, we're going to see 10 years in which Sensex companies, Nifty companies get disrupted as never before, but smaller companies, lesser known companies, rise up the ranks and become companies that, say, perhaps people in this audience then take stakes in.
But Saurabh, can I just to clarify, for you, what is driving this democratization? Is it access to funding only, or are there other things that are happening, especially from a reform point of view?
I think that is literally the trillion-dollar question, Roopa. What we've been able to figure out so far, and it's a tough one, but what we've been able to figure out so far is, let's take 91 as an analogy, right? If you take the July 91 Sensex, when Manmohan Singh gave his press conference on the new economic policy, of the 30 companies in the Sensex in July 91, 20 were out by 97, right? Basically, the new economic policy disrupted India, and companies which thrived behind the patronage and behind the license raj and behind the protectionist barriers, companies like Hindustan Motors, Premier Padmini, Indo-Rayon, Century Textiles, Bombay Dyeing, the entire class of 91 got badly disrupted. What I think is happening is the combination of Modi, Rajan, and technology is bringing about a similar disruption again. Just to take one facet of this, my reckoning is almost all the Nifty companies, perhaps barring one or two, almost all the Nifty companies have lost access to political patronage in Delhi. Right? This hasn't happened before. I'm sure most of the people in the audience know that the 10 years prior to the NDA's victory, we had Colgate, we had the 2G report, we had the KG-D6 report. I'm just rattling on the top of my head. The CAG reports that we saw between 2010 and 2014 were the exemplification of political patronage. What's happened is that, at least for now, what I can see over the last 1.5 years, those private jets are no longer flying to Delhi. Quite literally at Delhi airport, those private jets are no longer there. The 7 Series and the S-classes are no longer parked outside the ministries. And you quite literally have intelligence officers roaming the corridors of the ministries, making sure that that businessmen are not seen in the corridors of the ministries. So the loss of access to political power, the loss of access to political patronage has been, I think, a major source of disruption for the Nifty companies. It's demoralized them and it's thrown them off gear, and as a result, capital investment, CapEx, has all but come to a grinding halt. CapEx growth has all but come to a grinding halt in India. So in the long term, this bodes well for the country, but for here and now, we have a large listed community which really is at a loss as to how to operate in the altered realities that Modi, Rajan, and technology are imposing on them. I think this is as big a disruption as the 1991 economic policy. It'll be the making of India over a longer run, but for the time being, what you have is a really disoriented business community struggling to come to terms with how radically the rules have been changed by Modi, Rajan, and technology over the last couple of years. In a nutshell, I think that's the best I can offer.
Interesting. Did you have to say something, Bharti? So I think that's an interesting view and a fairly rosy view of what's happening with reform at the central government. And I think that that's something that we can debate as well, how quickly we're seeing progress on the political front moving and how that's reflected in growth. So what I wanted to ask all of you as well is, how do we, given that so much of this is driven by sentiment, and sentiment is so driven by momentum in reform, are we really seeing anything, and can you give concrete examples of reform moving in one direction or the other? And not just at the state level, because I think we've all made the point in different venues that states really matter, but yet it's an underappreciated story how much they drive the reform process. And are we seeing anything on the ground, either positive or negative, that can help form decisions? Sorry, Bharti, if you could start.
So, I think everybody in this room knows that we need reform at both levels, but a lot of the doing business in India stuff is really at the state level and lower. So what we've seen in the last 2 years is that, really three things. One, a lot of competitive spirit among the states to try to get investment in. And then the second thing we are seeing is that there is an interest in trying to figure out how we get investment in. And the center is driving a lot of the agenda in terms of reform. While the reforms have to take place at the state, they really do not have the capacity to think through the reform. In any case, they need to see precedents, before they'll actually do something. So the effort the center is making to provide model legislation, to provide policy guidance, etc., is actually, it's being taken up well, and I think that's another thing which will give us more hope as we go forward. The third is, and PwC, we work with a number of state governments. We're finding that there is some really interesting stuff happening on the ground. So I'll give you an example from Orissa, where we are doing some work, and they've done things that you wouldn't have imagined possible. So they actually have 2 days in a week when everybody from different departments who are supposed to approve or disapprove something sit together in one place. So if an investor has to come in and get something done, he can find everybody he needs in that one place. They've done another interesting thing, which is to have inspection teams which have people from all the different departments. So earlier, you'd get a boiler inspector one day, you'd get a pollution control inspector a second day, and you'd get a third guy another day. So now they'll have teams which will go together to really go and visit industries. So there's some fairly interesting stuff happening at the state level. Long way to go, but it does look good in some states. So what I'm finding fascinating is that some of the states which are supposed to be the worst at doing business, they're sort of sitting up and saying, okay, we better do something about it, and they've set themselves deadlines to try and get some of the changes happening. So I don't know what you guys are seeing, but there's some fairly interesting stuff happening on the ground.
No, it is. Even at the center, we hear some ministers say this, and I think that's true. From what Saurabh says, that I think that degree of discretion that used to be there, that's come down. Arbitrariness has come down. One minister clearly says that, when he took office, there were 50 files that came onto his desk every day, case by case. So the government is not dealing on a case by case basis. So a bunch of problems that come in are dealt with at a policy level. So that policy gets fixed rather than a case by case basis. So he says that now he doesn't sign more than 2 or 3 files a day. So that's one. I think states, and the other thing, you've seen this remarkable thing on the online thing of the government that you can now see, I think it's now spread across all departments of the government. You can see online, real time, which government employee has checked in at what time, and what time the government employee leaves. Remarkable. That something like this can't even be imagined. States, as Bharti says, that states are actually competing. And there are many things that have happened, slowly, steadily, that have happened in the states. I'm part of the Maharashtra Western Council, so I hear both horror tales and, together with this, things that have actually begun to change on the ground. Many things have moved online. Many things have moved online. I mean, we find this in our individual cases as well. I mean, you know, you try to get a passport, you try to register your motor vehicle and things. Now you can actually, registration of property now, that's coming. Problem in India was, I mean, most of the output markets, the liberalization, as Saurabh mentioned in 1991, what we haven't seen is reforms, liberalization in the input markets, land, labor. Capital has moved, and capital is one of the financial markets are one of the most rapidly moving areas. But now, as you said, that states are actively competing amongst each other. Many processes, permissions are online. One of the key things that you will hear across the place, even more than the permissions, I mean, getting electricity connection and so on, is this thing that you mentioned, an inspection. Inspectors, the inspection Raj, more than the license Raj, was the bane of all, especially small and medium industries. So now what they're doing is moving rapidly, some states more than the others, into a maker-checker kind of concept. So one guy decides what days and what inspection areas will happen, and somebody else, I mean the guy who decides doesn't go for the inspection, somebody else, chosen at random, goes for an inspection on a time schedule. So I mean he will not go there randomly. They're beginning to move forward, I mean trying to classify inspections in terms of risk-based inspections. So there are low-risk industries, medium-risk industries, high-risk industries. So the low-risk industries will be completely out of the ambit of inspections. It will be self-certification and so on, so no inspection in the low-risk industry. So some of these things, and there are more. Obsolete laws, that's another area that, and some states, Rajasthan, has quietly taken off about 30, 40 laws from its books. We don't read of that very much. You really have to delve. India, one of the problems is that you definitely don't want to beat your drum on the reforms too much. I mean, you want to work quietly under the radar, not publicize things too much. Because the moment you do that, there's some opposition or the other that comes in. And once this thing is done, people realize how easy it is. It is not really that big deal that is made out.
Just a quick follow-up. So I agree with both my fellow panelists. I think what you're seeing, though, is more process reform than policy reform. I think on the policy reform front, both because of just the inability to get things done in Parliament, and because I think there is genuinely a lack of big picture ideology from the people in charge in Delhi. I think on the policy reform front, we are stumbling, but on the process reform front, I echo the points made by both my panelists that we've genuinely seen progress. I think the tales of being able to get passports easier, birth certificates. I remember my daughter was born 6 years ago, and I remember how much hassle I had to go to get the birth certificate. A colleague had a daughter last week, and he managed to get the birth certificate online. I was just stunned to see how much India has changed. One word of caution, though. I think whilst I agree the states are getting their act together, the task at hand is mammoth, because what's happening in our country is we're getting 10 million people joining the labor force each year. The job creation, I doubt, is even 1 million jobs a year. So you're getting 9.5 million unemployed youngsters each year. And if you look at India north of the Vindhyas, where 3/4 of the country's population lives, not only do you have a huge dearth of job creation, so whether you go to villages in UP, Haryana, I went to Kashmir 2 weeks ago, I've been to villages in Rajasthan. Across North India, you see a common problem, which is large number of unemployed people hanging about with nothing to do, no jobs in sight. Combine that with the stats that we all know, the gender disparity stats that we all know, and especially in the 15 to 35 age bracket, the gender disparity stats for North India are an absolute shocker. What you therefore have is a situation ripe for social explosion. Large numbers of unemployed youngsters across North India, very few jobs, poor educational systems. The government schooling system has let people down across the country, but especially so in the northern part of the country. My reckoning is, in the next year and a half, we will have many more Haryanas and many more Rohtaks happening, because the social situation is at a boiling point. So whilst happening Haryana happened, I think, not the riots in Rohtak, happening Haryana, the investor summit happened, I think, 48 hours ago. But obviously, very few of us paid any attention to that. Most of us obviously saw in great detail what happened in Rohtak and how Maruti Suzuki was forced to shut down its factories. And I think in that juxtaposition, you both have the progress in India, i.e. states trying to get foreign investment, get FDI going, But at the same time, states grappling with what is a real mess on the social side, and obviously a mess which has been 20 years in the making. I reckon for the next year and a half, we'll see more of the mess than the happy side of the story.
I just want to follow that up with something that I've observed over doing this panel in particular over the last 3 years. And I think this has been the insight that stayed consistent throughout panelists and throughout years, which is that while most people will focus on, let's say, a topic like infrastructure as being the biggest obstacle for India going forward, it has always come out that this job, if it's generating 1 million, in a good year, maybe 2 to 3 million jobs a year for India, this question of employment generation is actually the biggest obstacle long term. I don't know if any of you disagree with that, but I think that's come across pretty clearly as the priority in terms of policy. And
no, I think you're absolutely right. And the challenge is we're falling further and further behind on the competitiveness stakes, right? So if you see India's export data, for the last 14 months, for 14 consecutive months, we've had shrinking exports in India. I don't think, Saugata, I don't think we've had a similar period of shrinking exports before. In those 14 months, whilst we've had shrinking exports, Bangladesh's exports have risen by 8%, Vietnam's exports have risen by 9%. So what's happening is our manufacturing sector, for a variety of reasons, including lack of skilled labor coming on stream, antiquated labor laws, our manufacturing sector is falling further and further behind, which is retarding job creation, which is creating a tinderbox of a situation out in the real country. And I don't think our experts in the past didn't have answers to it. The current government doesn't seem to have answers to it, notwithstanding the Prime Minister's commitment to create 100 million jobs, I think, by 2024. That's more jobs than I think India has created in the last 15 years. But anyway, that's the government's target, 100 million jobs in 2024, and it's a serious challenge. It's a big challenge.
So, with your permission, Roopa, I mean, so Saurabh's point, one of the reasons with exports is that the rupee has actually strengthened significantly compared to our, I'm tonsorially challenged, so to say. So, with the talking of the rupee, I mean, that's visit to a barber, the barber says that he asks, so what's your view on the rupee? What does he know of the rupee? I mean, so I sat quietly. So he says again, what do you know of the rupee, sir? So then I got irritated. I asked him, so why are you asking the rupee? What do you know of the rupee? So he says, you're right, sir, I know nothing of the rupee, but I know that every time that I've seen you talk of the rupee, your hair stands on end, and it makes it easier to cut. So this is one area that's a complete minefield. We all of us were talking about the rupee. So I think one of the reasons that our exports are lagging behind, which is a serious problem, I don't think anybody knows what to do about it. Should we just let the rupee slide? If you see the rupee, I mean, we have followed the Chinese currency, the CNY, pretty closely. All the others have tanked. So, I mean, we are getting priced out. There are other factors, as Saurabh mentions. But the rupee is one part. But we can't let it slide too much because that will choke off capital. So, I mean, we are in a cotton neck cleft. I don't know which side. But I think overall, from your point of view, I think the rupee will depreciate because, I mean, looking at it from an inflation interest rate differential point of view, very gradually. Sometimes it will go up, sometimes it will go down, but the long path is that it will depreciate.
can I just ask you another question on that? On this, the rupee is the big elephant in the room, particularly for this group. And while we might talk about the rupee strengthening over recent times, when you take a big chunk over the last decade, you're talking about massive depreciation against the dollar, maybe not the, some of the other trading partners. When you say that you expect more depreciation to come, do you think that it's going to be in a similar line to what we've seen before, in some sense, not much movement and then something happening quickly and it being sizable, or just gradual depreciation over time? And to what degree can you say, as difficult as it is?
Difficult question, but I think, I mean, with our interest differentials with the US and the basket of currencies, it's not just, when we talk of the rupee, we normally talk of the USD INR pair, the rupee pair with the dollar. But it's actually the basket which is more important, the basket which is the NER or the RERs that economists talk. That's actually climbed up significantly. So, I mean, we are pricing ourselves out of the market in the currency markets. So, but I mean, typically, I think the recent move up from 69 up to 67 odd what, I think it's more a play on the non-deliverable forwards markets. I mean, I'm not going to get into details on this, So what happens is whenever there's an arbitrage opening between onshore and offshore markets, typically there is some trade invoicing, funny stuff that happens, which we don't see in terms of capital flows, but will show up inevitably when you get the export data. So I mean, looking at export data is also, I mean, you never know what's going on with invoicing exports and so on. But I mean, typically over a period, if US inflation rate goes up to 2%, which is their target, and ours comes down to about 4 or 5%, and Governor Rajan talks about a productivity differential of about 1.5% odd, then typically you would tend to expect that the rate of depreciation of the rupee would be about 2.5% gradually over a period of time. There'll be ups and downs depending on capital flows and so on.
My last question to all of the panelists before we open it up to questions from the audience has to do with the rural economy. And I think that we saw a lot of focus on that coming out of the budget. But where we've seen pain in the rural economy over the last 2 years, do you, as panelists, expect that to continue? Do you see any specific areas where there are opportunities? Or again, going back to focus on rural India from the government, is that going to help or hurt the process in the future? I'm sorry, again, I'm going to start on the other end with Saugata, because I know you have strong views about agriculture. And
no, I know, I have. I mean, because it's no longer a matter of dealing with rural distress anymore and so on. Now it's a food security, there are social issues that Saurabh mentioned. I mean, I think this needs to be done very. I think there are some good measures. This insurance thing that Prime Minister himself is pushing, I think this is a very good measure. Water is, I mean, you think we are energy challenged, you wait for water. What's going to happen to India with water? The initiative in Maharashtra, Chief Minister's initiative, Jal Yukt Shivar, I think is a good, very good initiative in terms of micro irrigation. It has worked wonders in Marathwada and Vidarbha, two of the most drought-prone areas in Maharashtra. I think this needs to be rolled out. Agricultural productivity is not going to rise. I mean, land is a major problem in India. But unless we move, and the other major initiative is this national markets, the unified agricultural market. 12 odd states have already repealed the APMC Act, the Agricultural Produce Marketing Company. We need to have a good agrarian, and that's that entire thing, that ecosystem of logistics, because once you discover prices, once you trade, then you need to move your goods, so you need a good transportation system, you need a good roads network, which is the Prime Minister's Gram Sadak Yojana and things. But I mean, these things are definitely going to help, and I'm so glad that the focus this time has shifted explicitly on agriculture. Because without this, there will be no manufacturing, no nothing. The other small point that I wanted to make was that in terms of job creation, we are not going to get job creation easily. I mean, Coal India used to employ massive numbers of people. Coal India output has gone up 20-30%. Now with these continuous mining processes, these huge James Bond style machines that now dig into coal, manned by 4 or 5 engineers sitting there and with all the other guys who used to use shovels. The same thing, you talk to industrialists, they will point to you these spanking factories with robotic lines, automation and things, but no people. So the only way to create jobs is to focus on the small and medium enterprises. And there, I think we as a bank, we are constantly on the lookout to see how we can fund small and medium enterprises more using data analytics and things. One of the best things that have happened in the recent past, particularly in the banking, is increasing data disclosure. And that's something which is a must. And that is what will induce transparency and will induce better processes and system flows in there. I'm so sorry, I took my...
Just quickly on the agri situation. What happened in the 10 years of UPA rule was subsidies compounded at 20%. That's the on-balance sheet subsidies of the government of India compounded at 20%. If you add off-balance sheet subsidies, things like Food Corporation of India spend, subsidies compounded at a staggering 25% from 04 to 014. Now, think of those subsidies almost like an airdrop of cash on rural India, because that's what it was. We have very poor targeting of subsidies in India. The current government is trying to change that using the Aadhaar program, which was the UPA's brainchild. If Aadhaar works, we'll get better targeting of subsidies. But in effect, for 10 years, think of a helicopter flying over rural India and dropping cash on rural India. What that did was it masked the extent of the problem which is of very poor productivity in agriculture and almost zilch job creation in the vast majority of the country. So you basically taxed the middle class, taxed corporates, took that money, airdropped it on rural India for 10 years, and you masked the extent of the problem. Now, for whatever reason, and I don't know why exactly the NDA has done it, I'm not saying it's a good thing or bad thing, the NDA has turned off that faucet of cash for rural India. Minimum support prices for crops didn't go up, rural subsidies got tailored. Even in this budget, where the government made a song and dance of giving money to rural India, most of it is smoke and mirrors. If you sort of cut through the budget data, even in this even in this budget, the government has grown rural transfers by a mere 14%, much below the NDA's 10-year track record. Now, what that is doing is obviously creating very visible rural distress, which is visible whether you go into the interiors of Maharashtra or the interiors of UP. And I think everybody in this room who wants to invest in India seriously, I would suggest do at least one rural visit to understand how badly messed up things are in the country. Because without that, you really won't get a perspective on how deep the distress is running at the country, how high anger levels are in the vast majority of the country. Now, is there an easy way out of it? I agree with Saugata, there isn't an easy way out. And I think this is where you have to sort of turn around and say, we would love to get some big picture thinking from the people in charge of the country at the state level and at the center level. And folks like PwC perhaps can act as interlocutors here, that unless something is done over the next couple of years to address this level of rural distress, you will have social violence and outbreaks of anger at a far greater level. We will have many more Rohtaks on our hand. The other aspect to consider is the opportunity therein. Because rural India is in such a badly messed up state, companies out there who can come up with positive interventions in the agri sector, whether it be through new type of agrochemicals, new type of agricultural implements, commercial farming models that work in the country, there is a huge commercial opportunity. Right? Even in the listed space, I can see one of the fastest growing sectors, one of the fastest growing profitable sectors in the listed space is agribusiness. My suspicion is in the unlisted space, the agribusiness opportunity is even bigger. So yes, in India, problems and opportunity exist hand in hand. The problem is as much a national and a social problem, but the opportunity at a real business level is considerable in agribusiness, because that's a situation where there's a huge amount of labor, there's a real need for food, and there are very few positive governmental interventions in the agribusiness side.
Great, I think we're just at the end of time. Thank you, panelists. Thank you, everyone.